Hello dear students, in this video we are going to do AS16 borrowing cost, all provisions, all the study material questions and all the past paper MTP, RTP questions will be covered. Okay, so starting with borrowing cost. We are more familiar with the term, which term? Finance cost. Yes or no? In the statement of P&L, finance cost, interest cost. What comes to our mind is interest cost. If there is a loan, if there is debenture, if there is bond, you need to pay interest. Your entity needs to pay interest. So what is the treatment of this interest which you are paying in the financial statements? If somebody is asking, what is the treatment of interest? Without hesitation, you will say, interest expense should be charged to statement of P&L. Yes or no? Interest cost should be charged to statement of P&L. Then why do we need a guidance? Then why do we need a standard? Is the question. This standard talks about not charging interest to statement of P&L. This standard talks about capitalization of borrowing cost. This standard talks about capitalization of borrowing cost. Capitalization of borrowing cost. When can you capitalize borrowing cost? When you pay interest for a loan, your normal entry will be interest to bank. When you pay interest, what is the journal entry? Interest to bank. Interest to bank and second journal entry is P&L to interest. Yes or no? But when you should capitalize that interest, instead of P&L to interest, when you should do asset to interest. Are you understanding? When you should capitalize the borrowing cost. Starting with, let's all study together, need and objective. Need and objective of the standard is to prescribe the treatment of borrowing cost, whether to capitalize or to charge to statement of P&L. Whether this interest to be capitalized or whether this interest to be charged to P&L. So when to capitalize? So study with me. Because it is accounting standard, you need to exactly try to write the lines given in the standard. So take an effort and study. Borrowing cost directly attributable towards ACP, acquisition, construction and production. Acquisition, construction, production of an asset, again this is a new term for you, of a qualifying asset. I have not heard this qualifying asset before. Yeah, we'll study. Of a qualifying asset needs to be capitalized. Okay, borrowing cost directly attributable towards acquisition, construction, production of a qualifying asset needs to be capitalized. And you are like, what is a qualifying asset? I don't know. I have not heard of qualifying asset. Yeah. Before the example, before we'll be discussing an example, but before example, just have a look. Qualifying asset is an asset that takes substantial period of time for its intended use. That asset which you are acquiring, which you are constructing or you are producing will take some time. How much time? Substantial time for its intended use. Which means asset which is ready to use, already in ready to use state or ready to use within short time is not a qualifying asset. Okay. So I need to understand with some examples. Okay. But before that, substantial period of time means what? How much is substantial period of time? It is not defined. That is what it is interesting. Not defined. Substantial period of time is not defined in AS16. It depends on the facts and circumstances of each case. Generally a period of 12 months. Generally a period of 12 months or more is considered as substantial period of time. However, a shorter period can be justified based on the facts. It can also be considered as substantial period of time. If you take a shorter period, that shorter period can also be considered as substantial period of time. Are you understanding? So you're like, no ma'am, we are not understanding. What is this? Yeah. So let's assume we are constructing a building. We are constructing a building. Now tell me, what is the treatment of this material cost incurred? What is the treatment of material cost incurred? What a question, it will be capitalized. Why? What is the concept if a small kid is asking? But what is the concept behind capitalizing? Because when we incur this material cost for the construction of a building, the benefit you are going to get not just for 1 year. The benefit, because it is building, you may get the benefit for 30 to 50 years. Usually the life of a building. So material cost can be capitalized. What about labor cost incurred or technician salary, site preparation cost, initial delivery expenses, so many items during the construction period? What is the treatment? Will be capitalized. Yes or no? Yes, this we have studied in AS10, PP. Now, what if for this construction of a building, there is a loan? And this construction period is 3 years. So, during this 3 years, you will be paying interest. During the construction period, you will be paying interest. Construction period, you will pay interest. And when you pay the interest during the construction period, without this loan, building would not be completed. Without this loan, the construction would not be completed. So, interest expenditure you pay during this construction period is a directly attributable expenditure for the construction of the building. Therefore, the standard says, as per AS10, all the directly attributable expenditures for bringing the asset into present location and condition can be capitalized. Yes. So, interest is also becoming a directly attributable expenditure. Are you understanding the concept? Yes. So, interest also can be capitalized. Interest also can be capitalized. Now, interest also can be capitalized. I understood. Now the question is, what if I bought a car and there is a loan? I've taken a loan and I bought a car. Now, can the interest payment be capitalized? No, because the car is already in ready to use. Car is already in ready to use condition. So, if I bought a car and also this car is financed by a loan, I'll be paying interest, and this car is already giving future economic benefits. So interest, no car is manufactured or no car is constructed during that period. So the entire interest should be charged to P&L. Okay. I bought a building. I acquired a building which is already in ready to use condition. I bought a building of 1 crore and there is a corresponding 1 crore loan. What is the treatment of interest? What is the treatment of interest? Here also it's a building, here also it's a building. What the standard says? Borrowing cost directly attributable to acquisition, construction, production of a qualifying asset. Qualifying asset is an asset that takes substantial period of time for its intended use. If these assets are already ready to use condition, then the interest will be charged to statement of P&L. Are you understanding? One more example. I bought a heavy plant and machinery. And plant and machinery is given in parts. So to assemble these parts, to install this plant and machinery, it will take 15 months time. Oh my God, a heavy plant and machinery, and the cost of this plant and machinery is 30 lakhs, and I have a loan of 30 lakhs or 20 lakhs or 10 lakhs, whatever is the loan. Now I'll pay interest during this 15 months time. During this assembling period or this installation period, I'll be paying interest. What should be the treatment of that interest? That interest can be capitalized because this plant and machinery is a qualifying asset. I acquired, and from the date of acquisition to the date of installation, it takes substantial period of time, and I am paying interest during that period. That interest can be capitalized. Are you clear? Okay, so let's read that point once more. Borrowing cost directly attributable towards acquisition, construction and production of a qualifying asset can be capitalized. Qualifying asset is an asset that takes substantial period of time for its intended use. So if the asset is already in ready to use state, or it's ready to use within short span, 1 month time or 2 months time. So I bought a washing machine by taking a personal loan of 50,000. Washing machine will be installed the next day onwards. And when I'm paying interest, I'm already getting future economic benefits from that washing machine. So that interest should be charged to statement of P&L. Are you clear? Or the underlying concept. Now pay attention. The underlying concept is matching concept. When I pay interest during construction period, am I getting any revenue from the asset? No. So those interest against which no revenue is received, or those interest, an asset is what being constructed, then capitalize. If I pay interest and simultaneously I am getting benefit, then I am getting benefit which will come in P&L, and this interest also please come in P&L. Matching concept. Okay. Now, so meaning of borrowing cost, need and objective, qualifying asset, substantial period of time. I hope this part is clear to you. Now, what are the components of borrowing cost? Borrowing cost, what comes to my mind is interest. Only interest is borrowing cost? No. What are the components of borrowing cost? See, my strategy will be like, I'll be doing all this theory and then only we'll move on to questions. Okay. So what are the components of borrowing cost? Borrowing cost, in my opinion, only interest. So the standard says your opinion is, in my opinion, borrowing cost includes only interest. So the standard says your opinion is totally not required. Only my opinion is what taken. So as per AS 16, there are 5 components of borrowing cost. There are 5 components of borrowing costs. Let's study 5 components of borrowing cost. Maybe a theory or an MCQ question can be asked. What are the components of borrowing cost? Interest and commitment charges. What is this interest and commitment charges? Maybe when I'm taking a loan, when I'm signing the loan agreement, I'm also committing some charges, like there will be a loan processing charge of 1%, or there will be periodical bank charges. Along with interest, there will be other charges collected by the bank. That is also part of my borrowing cost. Okay. Now, next one, amortization of discount or premium relating to borrowings. What is this? See, debentures and bonds are also borrowings. So if there is discount on issue, 10 lakhs debentures I issued with 10% discount means eventually I received only 9 lakhs. 10 lakhs debentures issued at 10% discount means I am getting only 9 lakhs. So that 1 lakh is discount expense, which is a borrowing cost. Yes. Premium. Then what is premium? Premium on redemption. 10 lakhs debentures I am redeeming at a premium of 10% means I am paying 11 lakhs. So extra 1 lakh is also my expense, which is a borrowing cost. Okay, fine, understood. Now, amortization of ancillary cost incurred in connection with the arrangement of borrowings. See, for example, I'm a company taking 100 crores loan. I need 100 crores loan. Sometimes for this, the bank will be asking for some guarantee. I need some guarantor. So for guarantee, sometimes I approach those entities which provides guarantee, or agents which help us to get a guarantee. Okay, and we need to pay guarantee commission, or sometimes agents commission for arranging this loan. There can be agents. For agents commission or guarantee commission which I need to pay for arrangement of borrowings, also considered as borrowing cost. Amortization of ancillary cost incurred in connection with the arrangement of borrowings. Okay, fine, got it. That is also borrowing cost. The next one may not be familiar because we have not studied AS 19. If you have already studied, very well, otherwise. Finance charges in case of finance lease. Time being, let's time being, let's ignore this. Finance charges in case of finance lease. If finance lease, as per AS 19, there will be a finance charges. That finance charges also forms part of borrowing cost. First of all, the name itself is finance charges. So it's borrowing cost. Exchange difference in case of foreign currency borrowings related to a qualifying asset. We'll be discussing this with so much of importance. Let's discuss this later. Now, so borrowing cost includes, come on, borrowing cost includes interest and commitment charges. Borrowing cost includes amortization of premium or discount in connection with borrowings, amortization of ancillary cost incurred in connection with the arrangement of borrowings, finance charges in case of finance lease, and exchange difference in case of foreign currency borrowings. Okay, now listen, there was a question once asked, that is, an entity prepaid the loan. Prepaid. ഒരു ലോൺ പ്രീപേ ചെയ്തു. അപ്പൊ പ്രീപേ ചെയ്തപ്പോൾ ബാങ്ക് ചാർജ് prepayment penalty. So is prepayment penalty a borrowing cost? Prepayment penalty, a borrowing cost. So that's an ancillary cost. But incurred in connection with the arrangement of borrowings ആണോ? No, incurred in connection with the repayment of borrowing ആണ്. That cannot be considered as borrowing cost. It cannot be capitalized also. Okay, that will be charged to statement of P&L. I cannot accommodate in this. Therefore, it will be charged to statement of P&L. Okay. Now, so that's with components of borrowing cost. That will take care of components of borrowing cost. Now, treatment of borrowing cost. This is the most important area. How much borrowing cost can be capitalized? The crux of the standard is treatment of this borrowing cost. What is the treatment of borrowing cost, or how to calculate this borrowing cost? So please listen here. Borrowing cost. So please pay attention. To compute borrowing cost, to compute borrowing cost to be capitalized, we divide the loans of a company into two: specific loan, non-specific loan. Non-specific loan means general loan. Non-specific loan means general loan. So specific loan means loan specifically taken for specifically taken for what? Specifically taken for qualifying asset. Specifically taken for what? Qualifying asset. Specifically taken for qualifying asset. Okay, what is the treatment of the specific loan? If specific loan, how much interest will be capitalized? Actual interest. Actual interest during the full tenure of the loan? No. Actual interest during construction period. Actual interest during construction period. Actual interest during construction period minus any short-term investment income. Any short-term investment income. Say for example, my actual interest is 5 lakhs during the construction period. But listen, if for example I have taken a loan of 70 lakhs. The entire 70 lakhs, when I'm taking a loan, I will be credited to my bank account. So, and 70 lakhs I've taken for the construction of building. So, is it like I'm withdrawing the entire 70 lakhs on a single day? No, on piecemeal basis. So, for example, first month I withdrew only 10 lakhs. Second month I withdrew 15 lakhs. Third month, I withdrew 15 lakhs. And fourth month, I withdrew the balance. How much is there? 30 lakhs. So first month itself, I know that I need only 10 lakhs. So balance this 15 plus 15 plus 30. I can deposit as an FD. FD, 1 month FD is available, 2 months FD is available, 3 months FD is available. I can book an FD and I can book an FD and earn interest. Yes or no? Because I know that 60 lakhs I need only in the next month. So I can earn interest during the course. So interest expense is 7 lakhs, and if I earn an interest of 1 lakh, how much is the interest that can be capitalized? My expense is 7 minus I got 1. So how much is the interest I can capitalize? 6 lakhs. Are you clear? Yes. So if it is specific loan, how much is the interest I can capitalize? Please study with me. Actual interest incurred during the construction period minus short-term investment income. Now, what in case of general loan? General loan. General loan. What is general loan? Non-specific loan. What is general loan or non-specific loan? Which means I have a loan of 1 crore. Why did you take that loan? I will use it for asset 1. I'll use it for asset 2. I'll use it for working capital. I'll use it for day-to-day operations. That is what working capital. So many purposes I will be using it. Okay, so what is the treatment? Not a specific, directly relating to that asset. Allah, it is used for many purposes. So if it is only one loan for many purpose, then amount used for qualifying asset. Amount used for qualifying asset into rate, interest rate, into number of months divided by 12. What is this number of months divided by 12? Let's find out with the help of an example. Even though I said I'll do all the provisions and then only question. If you want to try a question now itself, we can do. Okay. Now, what if there are many loans, which is I consider very, very, very important. Many loans. Many loans means many non-specific loans. Means I have an 8% bank loan. I have a 10% debentures. I have an 8% bonds, a 14% again debentures, which is all a mix is used for assets, working capital. Then what I'll do? Then we have to calculate weighted average borrowing rate. Calculate weighted average borrowing rate. So same formula, instead of this rate of that one loan, we use weighted average borrowing rate. So let's do this. Let's find out what it is. This is very, very important. This is the most important calculation in this standard. Okay. So if you want, we can try a question now itself. I'll take a very good one. I think I'll take this question number. So I'll take this question number 15 for your better understanding and then try. Okay, let's understand. Zebra Limited began construction of a new plant on 1st April 2021 and obtained a special loan. What do you mean by special loan? Specific loan of 20 lakhs to finance the construction of the plant. Okay. The rate of interest on loan was 10%. The expenditure was incurred on the construction of the plant was as follows. See, if this line is missing in your book, please add expenditure incurred on asset. 1st April. So I have taken a loan of 20 lakhs. And how much is the expenditure incurred for the asset? 1st April, 10 lakhs I incurred. 1st August, 24 lakhs. January, 4 lakhs. So 10 lakhs, 24 lakhs, 4 lakhs, which means total value of the asset is 34 lakhs. Okay. The company's other outstanding non-specific loan was 46 lakh. Yeah, that's why we already have taken 20 lakhs. Also, we have a non-specific loan, general loan, 46 lakhs with interest rate of 12%. So, how many non-specific loans we have? One. Only one non-specific loan. The construction of the plant is completed on 31st March 22. You are required to calculate the amount of interest to be capitalized. Pass journal entry for capitalizing the cost and borrowing cost in respect of the plant. Okay, typical A16 question. So read the question once more, then we will try. So, so for your understanding, let me write. We have a specific loan. We have a specific loan, how much? 20 lakhs, 10% interest. And we have a non-specific loan, 12% interest, 46 lakhs. And 1st April, we have taken 10 lakhs. 1st August, we have taken how much? 24 lakhs. And 1st January, we have taken 4 lakhs. For the construction of this building, we have taken loans. We have taken the funds out of loans. So how much interest can be capitalized? So please understand, listen here, listen, pay attention. So first I'll do. So computation of borrowing cost to be capitalized. Computation of borrowing cost to be capitalized. Okay. So 10 lakhs, I am withdrawing 10 lakhs for the asset. So what do you think? This 10 lakhs will be taken out of? This 10 lakhs will be completely out of? We have anyway taken a specific loan. So this 10 lakhs will be out of specific loan. Because 20 lakh specific loan is there. So directly taken for the asset. So first 10 lakhs will be from the specific loan. How much is the interest? 10 lakhs into 10 lakhs into 10% into 12 by 12. How much? 1 lakh. Then 1st August 24 lakhs. So how, from where we would have taken specific or non-specific loan? First out of specific loan, how much? Remaining 10 lakhs. 10 lakhs into 10% into, this is withdrawn on 1st August. So should I do August, September, October? No. If it is specific loan, entire interest during the construction period can be capitalized. Rule, please remember, we are not doing number of months and all, into 12 by 12. Entire 1 lakh can be capitalized. Next out of, so remember this point, next out of non-specific loan. How much is taken out of non-specific loan? Balance 14 lakhs, right? 14 lakhs into 10% into, here if it is non-specific loan, initial months that funds would have used for something else. From 1st August only we are using for our asset. So August, September, October, November, December, January, February, March. 8 by 12. So how much is that? Oh, yeah, this is 12%. I made a mistake, sorry. 12%. 14 lakhs into 12% into 8 by 12. It comes to 1,12,000. Okay. Then balance 4 lakhs is of course out of non-specific loan. So it is 4 lakhs into 12% into 1st Jan means how many months? 3 by 12. 4 lakhs into 12% into 3 by 12, 12,000. So total interest incurred is 3 lakh 24,000. Interest that can be capitalized is 3 lakh 24,000. Are you guys clear? Are you listening? Just go through the calculations. What is the entry for this interest? Normally, what is the interest entry? Interest to bank. P&L to interest. Here, no. The entry is asset to interest. Instead of P&L to interest is asset to interest. So, if you do a combined entry, I can do a journal entry is, this is building, right? So, what is the journal entry I can do? Plant to bank. How much is the total cost of the plant? 38 lakhs. Being cost of the plant capitalized. Now, when you pay interest, interest to, I'm not writing narrations. For exam, you should write narration, interest to bank or interest payable, 3,24,000. Now, plant to interest. Plan to interest, being the interest capitalized. So, you might be thinking, why all these journal entries? Interest capitalized, planned combined. So, one entry is enough, no? Plan to bank, total 38 lakhs plus 3 lakh 24,000. Plan to bank, 41 lakh 24,000 is the single entry. Plan to bank. I can pass the entry, planned to bank, the 41 lakh 24,000. This is fine. Are you clear? Are you okay? If there is a doubt, you can comment below. I'll try to clarify as early as possible. Now, let's do the next question. Let's do that question number 14. Question number 14. So the one which we did just now, question number 15, was having only one non-specific loan. This is very similar question with multiple non-specific loans. So if there are multiple non-specific general loans, then what do you need to do? Compute weighted average borrowing rate. So please listen. First Limited began construction of a new factory building on 1st April 2017. It obtained rupees 2 lakhs as special loan to finance the construction of factory building. Okay, so we started constructing a factory building on 1st April. We got 2 lakh specific loan with interest 8%. Further expenditure on construction of the building was financed through other non-specific loans. Details of other non-specific loans were, okay, these are the loans available. 9% loan, 12% loan, 14% loan. Date of taking these loans are not given. So we'll assume from the beginning we have these loans and interest rates are also given. The expenditure were made on the factory buildings on different dates are given. The construction of factory building was completed by 31st March 18. Okay, the loan was taken on 1st April 17 and construction was completed by 31st March 18. As per the provisions of AS 16, you are required to compute the amount of interest to be capitalized and pass journal entry for capitalizing cost and borrowing cost. Okay, so what you should do? Start writing. Whenever there is multiple loans, your working note number 1 should be, your working note number 1, computation of what? Weighted average. Computation of weighted average borrowing rate. Okay, weighted average borrowing rate. So first, what are the loans we have? 9%, 12%, 14%. 4 lakhs into 9%, 5 lakhs into 12%, and 3 lakhs into 14%. These are the interest incurred. Yes or no? These are the interest incurred. If date of loan is also given, then 9 months interest or 1 year interest, 6 months interest. Accordingly, I would have calculated interest divided by 4 lakhs plus 5 lakhs plus 3 lakhs. Again, if date of loan is given, how many months the loan is available, that I would have added in the denominator also. We'll be trying another question on this. But here date of loan is given. All loans are from the beginning. Okay, that is the assumption. So, 4 lakhs into 9% plus 5 lakhs into 12% plus 3 lakhs into 14% divided by 12 lakhs is, are you getting weighted average interest rate as 11.5% per annum? Okay, now computation of borrowing cost to be capitalized. So these are the expenditures incurred. I'm taking a screenshot. Now, computation of borrowing cost to be capitalized. So I've taken the dates. 1st April 2011, 3 lakhs. So what do you think? 1st April 2011, we have incurred 3 lakhs. So 3 lakhs would be taken out of first specific loan. Specific loan, how much is the specific loan we would have taken? Specific loan, 2 lakhs into, what is the interest rate given? Specific loan interest rate is 8%. So 2 lakhs into 8% into 12 by 12. So 2 lakhs into 8%, 16,000. And balance non-specific. 1 lakh non-specific loan. So it is 1 lakh into what rate is to be used? 11.5%, because this expenditure is incurred on 1st April itself, 12 by 12. 11,500. Next, also non-specific, 2,40,000 into 11.5%. April, May, Venda. So 10 by 12. 2,40,000 into 11.5% into 10 by 12 is 23,000. So balance again 4 lakhs into 11.5% into 1st August. August, September, October, November, December, January, February, March. 8 by 12. 30,666. 31st December, 3,60,000 into 11.5% into December means 3 by 12. 10,350. 91,516. So, or 91,517. This could have been 30,667. Then it is 91,517. This is the borrowing cost that can be capitalized. So, what is the entry? What is the entry? Asset to cash. I'll just write the total journal entry is asset or building. How much was the amount already incurred? 3 lakh plus 2 lakh 40 plus 7 lakh 60, 13 lakhs. 13 lakhs plus 91,516. 2 back. Are you listening and is it clear? I hope so. Just go through the calculations once more. Now let's come back to this theory and finish off commencement, suspension, cessation, treatment of exchange difference. What is this? Yes, commencement, suspension, cessation. Purely theoretical areas but very important for us. Commencement. So now listen. I have taken a loan on 1st April 2025 for the construction of a building. Loan. 70 lakhs I've taken for the construction of this building. But I could start the construction only on 30th September 25. So, can I capitalize the interest for April, May, June, July, August? What do you think? Can you capitalize the interest? Or should I commence capitalization only from this date? Then ulta. If I have taken the loan, I started construction from 1st April 25. I started construction from this date, but my loan is only from this date. To avoid all the confusions, the standards say, okay, I'll add a area. When can you commence capitalization? So a pakka theory area, or you can also get questions from this. When can you commence capitalization of borrowing cost? You should study only when all the three conditions are satisfied. What are the three conditions? Okay. Expenditure on qualifying asset should have incurred. 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 What do you mean by this? Expenditure on qualifying asset should have incurred, which means I already bought materials, I already incurred labor charges, I started incurring the expenditure from 1st April. Okay, expenditure on qualifying asset should have incurred. Then activities are in progress. Activities are in progress. Which are required. What activities? Activities which are required to get the asset ready for its intended use. Activities are in progress. You bought materials, but still activities are not in progress. Activities are in progress which are required to get ready the asset for its intended use. So this activities include, let me add on, include administrative activities also. Activities includes administrative spelling. Activities includes administrative activities also. But I didn't understand what does this include administrative activities also. For example, for the construction of a building, we need a plan. How this building will be like, this is plans you will be seeing. This plan, I need to get approval from local government like panchayat, municipality, corporation. I need the approval from this corporation. So 1st April I have taken loan. 1st April itself I started activities. That is planned and I have given to Panchayat for approval, but still 3 months I haven't received the approval. So only 4th month I started construction. But that activity is also considered as an activity. Like administration activities are also considered as activities, not just construction. All administrative activities are in progress. It's fine. You can start capitalization. Asset is being constructed, is in the process of being constructed, it is fine. Without getting approval from the local government, can you start construction? No. So that includes uh, activities. Activities are in progress. Now, very important, borrowing cost should have incurred. Borrowing cost. First, borrowing cost should have incurred. Then only a question of capitalization arises. Should have incurred. So, what are the points? What are the points? Study. What are the points? To commence capitalization, all the three conditions should have satisfied. To commence capitalization, all the three conditions should have satisfied. What are the three conditions? Expenditure on qualifying asset should have incurred. Activities are in progress to make the asset ready for its intended use. Borrowing cost is incurred. If all the three is, see, I have taken a loan on 1st April. 1st April itself, already materials are bought. 1st April itself, we started the activities. From April onwards, April month itself, there will be borrowing costs. So you can capitalize from 1st April itself. But your work activities started only on 30th September. Then you can capitalize only from 30th September. When all the three conditions are satisfied, then only you can commence capitalization. Are you clear? Okay. Now commencement. What is next? See, what is next is suspension of capitalization of borrowing cost. What is this? Say for example, my say 1st April 2025 is the date of loan. But my all the conditions are satisfied only from 30th June 2025. Okay. So listen, July 30th June 2025 onwards I can capitalize. So July 25, August, September, October, November, December, January, February, March. So I can capitalize interest for this 9 months. Now assume there was no work in August and September. Why no work in August and September? Because we had labor strike. Oh, or we had material shortage. No materials. Or we have fund issues. So no work activities were happened during August and September. But there was activities in July, October, November, December, January, February, March. Then interest can be capitalized only for this 1, 2, 3, 4, 5, 6, 7 months. And 2 months interest should be recognized to P&L. This you can capitalize. You should suspend the capitalization during these 2 months. No. Explain once more. Yeah, listen. When active work is interrupted, during the extended period, work started and then interruption during the extended period due to avoidable reasons. These avoidable reasons is what I was listing as labor strike, fund issues, or material shortage. So due to avoidable reasons means you could have avoided it. You should have arranged fund before, or you should have arranged materials before, or you could have tried to reconcile the problems of labor. Yes or no? Now, suspend capitalization. Suspend. capitalization. Suspend capitalization. Charge interest to SOPL. But now listen. Now two more points. First, I'm reading the second one. Delay out of unavoidable reasons like natural calamities. What? Say same example. There was no work in July and there is no work in August and September. Why? Because that time there was flood. So we couldn't do the work. So that is beyond your entity's control, right? You can still capitalize. Oh, I see. Are you understanding? And next one. No work in August and September. I'm taking no work in August. Why? Because we are constructing a 40 floor building. Okay, you are constructing a 40 floor building, and when you have done the basement, once the basement work is done, you have just completed this basement. After basement, 1 month, August, you didn't work. August month, there was no work. Why? Because you are constructing a 40 floor building. Once the basement is done, that basement should gain strength. Okay, you need to water and should gain strength. For that, there was a delay. To gain strength, we have given a maturing time. So that is what. When, listen, if you didn't understand, listen, the provision, when a temporary delay, which is necessary part of the process of getting an asset is ready for its intended use. A temporary delay is required to get the asset ready for its intended use, or delay out of unavoidable reasons. So if there are delays, that delays out of avoidable reasons, suspend. Delay is a necessary part of the process or delay is unavoidable. What you should write? Continue capitalization. Continue capitalization. Are you clear? Study the provisions, okay? Now, cessation of capitalization. When you should stop capitalization. When you should stop capitalization. Listen. See, we generally say you need a loan. See, what attracts AS16? You need a loan. Then you need a qualifying asset. Then interest of the loan during the construction period can be capitalized. Interest during the construction period. So what is this construction period? When we can stop capitalization? When we can stop capitalization? Capitalization is ceased when, what is the word they have incurred? What is the word they have added? Substantially all the activities necessary to prepare the asset ready for its intended use are complete. So capitalization should be ceased when substantially all the activities are complete. But why substantially all the activities? Listen, an asset is normally ready for its intended use or sale when its physical construction or the production is complete. But still, even though it is complete, there can be some routine administrative work which is still pending or still continue, or there can be some decoration work still pending, or there can be decoration work which is still pending. Still, it is considered as substantially all activities are complete. Again, I am constructing a building. And in one floor, in one building, some electrical fittings have not yet fixed. Or some sanitary fittings are not yet done. So it's all irrelevant. Substantially complete. Still the asset can be used by the customer. That is what substantially, if all the work is completed, capitalization is to be ceased. Now, one more point. When construction of an asset is completed in part by part. See, in a 10-storied building, 9 floors are already completed and occupied by the customers, but 1 floor still work is going on. But that 9 floors are already occupied and completed means capitalization of the 9 floors should be stopped. And capitalization can be continued proportionately for that 10th floor. So when the construction of an asset is completed in part by part and the completed part is capable of being used independently, then capitalization of that part should be ceased. Capitalization should be continued for the other parts. Easy. Cessation. When you can stop capitalization, you should not say when work is completed and all. Use the words given in the standard when substantially all the work is complete. Still, if there is any routine administration or any decoration works pending, still it can be considered as work is substantially complete. And when an asset is completed in part by part and a completed part is capable of being used independently, then capitalization of that part is to be ceased. Capitalization can be continued for other parts. Okay, cessation is also done. Now, the last area in the standard is exchange difference. Exchange difference. What is this exchange difference? What is this topic? I don't know. See, you should have done, or you have not done AS11, or you have already studied AS11. I don't know. Now listen. You have a foreign currency loan. So this is the last area. Pay attention. You have a foreign currency loan. How much? Say 10 lakhs. 10 lakhs US dollars. You have a foreign currency loan. For what purpose you have taken the loan? You have taken the loan for a qualifying asset. But I didn't understand. Why did you take a loan in foreign currency? So you are saying, see, we are brave people. In foreign countries, generally they are developed countries, so the interest rate will be less. Oh, very brave. So how much is the interest rate you are paying? 4%. And on that date, how much is the exchange rate? Say, for example, I am taking 74. 74 per dollar. Okay. Now, year end, the exchange rate has become 84. Year end, the exchange rate has become 84. Just keep these points in your mind. And if the loan was taken in India, interest rate would have been 14%. Oh my God. Interest rate would have been 14%. Now, what is the calculation? As I'm always saying, pay attention. First, how much is your actual interest expense in foreign currency? Your interest expense will be 10 lakhs dollars into 4% is the interest rate into when are you paying this interest? When are you paying this interest? Year end, generally year end. So how much interest you will pay? How much interest you are actually paying? 10 lakhs dollars into 4% into 84. How much interest you are actually paying? Oh my God, 33 lakhs 60,000 is the interest you are actually paying. This interest is for a qualifying asset? Yes. So you can capitalize this 33 lakh 60,000. Okay. Now the problem is, we are talking about not interest. We are talking about you can also capitalize the exchange difference. No, not clear. Please explain. Yes. Come on. What is the next point here? Next point, compute interest payable if the loan is taken in India. ഇന്ത്യയിലായിരുന്നു ഈ ലോൺ എടുക്കുന്നതെങ്കിൽ എത്ര എമൗണ്ട് നിങ്ങൾ ലോൺ എടുക്കും? How much loan you will take if the loan was taken in India? Then 10 lakh dollars into 74 will be the amount of loan you will be taking. 740 lakhs. Because 10 lakh dollars at the time of taking loan, $1 is equal to 74. So you actually need 740 lakhs. So 740 lakhs is the amount you would have taken as loan if the loan was taken in India. So how much is the interest rate you will be incurring? 740 lakhs. into 14%. Oh my God, 1 crore 3,60,000. What a wonderful decision you have taken by taking loan from outside India. Great. So how much is the savings difference? Identify the difference. How much is the savings minus 33,60,000? Difference is you saved 70 lakhs. Super. Savings is 70 lakhs. But now there is a problem. What is the problem? Interest wise you have savings. Great. But now because you have a 10 lakhs dollars loan, being a monetary item as per AS 11, being a monetary item as per AS 11, this is to be restated to 84 because year end the loan value you have taken loan 740 lakhs. On the date of taking loan, the entry is bank to loan 740 lakhs spot rate. But year end it has become 84. So 740 lakhs only you got. But year end when you repay, you may have to repay 840 lakhs. So how much is the increase in liability? 10 lakhs dollars into rupees 10 increase. My God, which means how much increase? Interest wise you have savings. But to save 70 lakhs, oh my God, you incurred an additional liability of 100 lakhs. So can you still say you're brave? Can you still say you're wise? No. Was it a brave decision? No. Because huge amount you need to repay. When you repay the loan, there is a fluctuation in foreign currency. As per my example at least. So we are asking, dear AS 16, we can capitalize 33,60,000. But we also incurred 100 lakhs for the borrowings only. So can I capitalize 133 lakh 60,000? 133 lakh 60,000 can I capitalize? So can you please number it in your book? 1, 2, 3, 4, 5 steps. Borrowing cost to be capitalized is step number 1 plus step number 3 and 4, whichever is less. Not clear, not clear. That is, you can capitalize 33,60,000 plus. The standard is saying you can capitalize either the savings or increase in liability, whichever is less. Which means here 70 lakhs. So I got a maximum capitalization of 1 crore 3,60,000. Which means had the loan been taken in India, if the loan was taken in India, 1 crore 3,60,000. Maximum capitalization we can give as per AS16 is 1 crore 3,60,000. Nothing more. So, watch it again, rewind and watch it again, and then come back. Now, how much is the interest incurred by our company? 33,60,000. Interest. What are you doing with this? Capitalization. Capitalize. How much is the exchange difference incurred? 1 crore. Of that 1 crore, 70 lakhs capitalize. Excess 30 lakhs, what you should think? Charge to PN. Give some resting time. Let it get processed. Okay. Now, what if, I'm writing it in red color, okay? What if the increase in liability is only 50 lakhs? What if, I'm just randomly taking, what if the other figures all remain the same? What if this increase in liability is 50 lakhs? Which means how much you are incurring? 33 lakh 60,000. Sorry. How much you are incurring? This 33 lakh 60,000 and 50 lakhs. Only you are incurring 83 lakh 60,000. Your actual expenses 33 lakh 60,000 interest and 50 lakhs is the increase in liability, then you can capitalize. 33 lakh 60,000 also capitalize. 50 lakhs also you can capitalize, because what you totally incur is only 83 lakh 60,000, which is lesser than 1 crore 3 lakh 60,000. So you capitalize both. Capitalize, 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 capitalize. Okay. Now one more last scenario which I am writing in black. Instead of increase in liability, exchange gain. What if it was exchange gain? Dual benefit. Interest also savings, again exchange gain also. Then exchange gain will be charged to P&L as income. If it is exchange gain, transfer to P&L as income. Are you clear? So let's try questions and find out. Yeah, let's move on. From the first question onwards, let's discuss. First one. A company incorporated in June 2020 has set up a factory within a period of 8 months with borrowed funds. Okay, so we have set up a factory and company is incorporated in June 2020. Our factory setting up time is 8 months. The construction period of the asset had reduced drastically due to usage of technical innovations by the company, and company is able to justify the reasons for the same. So we have taken only 8 months construction time. So is it qualifying asset? If a shorter period can be justified as a substantial period of time, it can be considered as substantial period of time and qualifying asset. Whether interest on borrowings for the period prior to the date of setting up a factory, as it has taken less than 12 months, you are required to comment on the necessary treatment. Very basic question. So 8 months only you have taken. So this construction time till the factory is ready to use, this in 8 months interest can you capitalize? So how they have written, as per AS 16, a qualifying asset is an asset that takes substantial period of time. What is substantial period of time? It depends on facts and circumstances. Ordinarily, a period of 12 months is considered. However, less than 12 months. Okay. Under the present circumstances, construction period has reduced drastically. Fine. An enterprise that completes the asset in 8 months should not be penalized for its efficiency for denying its interest capitalization. Therefore, factory is constructed in 8 months. It can be considered as a qualifying asset. Can be capitalized. A very basic question. U Limited has obtained a loan of 620 lakhs for a complete renovation and modernization of its factory. Plant and machinery was acquired under the modernization scheme and installation was completed on 30th April 2021. You took loan on 1st April and the work is completed on 30th April 2021. Expenditure of 564 lakhs. So 620 lakhs loan you have taken. 564 lakhs was incurred on this plant and machinery, and the balance loan of 56 lakhs has been used for working capital purpose. Company paid a total interest of 68.2 lakhs. The accountant seeks your advice. You know everything. So accountant seeks your advice. So first, when you write this question for exam, first you write as per A16 borrowing cost. Borrowing cost attributable to acquisition, construction, production of a qualifying asset can be capitalized. Plant and machinery is a qualifying asset as it takes substantial period of time for its intended use. But for the installation of plant and machinery, only 564 lakhs is used. Balance is used for working capital. So that working capital, the interest attributable to working capital should be charged to P&L. So what I will do, total interest is 68.2 lakhs. 68.2 divided by, this is for 620 lakhs, into 564. Proportion I am taking 68.2 divided by 620 into 564. 62.04 can be capitalized. Balance 6.16 charged to P&L. Okay. 62.04 capitalized. This is not a qualifying asset, so 6.16 charged to P&L. Then question number 3. This is foreign exchange, which we did just now. Omega Limited has borrowed a sum of $10 lakhs at the beginning of financial year 21-22, for a residential project 4%. Interest is payable at the end of the financial year. At the time of availing loan, exchange rate was 56 and it was 62 at the end. If Omega had borrowed the loan in India, the pricing would have been 10.5%. How much is the borrowing cost and exchange difference to be capitalized? Come on, I want you to write it as 5 steps. So first, interest. Actual interest for this foreign currency loan. $10 lakh into 4%. When are you paying interest? Generally at the year end. So your interest expense will be 10 lakhs into 4% into 62, 24 lakh 80,000 is the actual interest you are paying. Now, what is the interest if loan is taken in India? If loan is taken in India, how much loan you would have incurred? How much loan if loan is taken in India? How much interest? $10 lakhs into 56 lakhs. $10 lakhs into 56 into 10.5%. Well, 560 lakhs, sorry, not 56 lakhs, 560 lakhs into 10.5%. 58 lakh 80,000. Again, one more. Oh my God, how much savings? 24 lakh 80,000. Savings or difference 34 lakhs. So what if, okay, savings 34 lakhs. Now increase in liability. So we are talking about cost. If it is decrease in liability, very good, charge to P&L, transfer to P&L as income. Here it is increase in liability. How much? 56 has become 62 means 4 rupees. 10 lakhs into 4. 10 lakhs into 4. 40 lakhs. How much is the borrowing cost that can be capitalized? You can anyway capitalize 24 lakh 80,000. But out of this exchange difference, how much only they are limiting the capitalization to 34 lakhs. So 34 lakh plus 24 lakh 80,000 maximum capitalization possible is. So if the foreign currency expense, interest and foreign exchange loss, if it exceeds Indian interest rate, maximum capitalization you can get only 58 lakh 80. Balance exchange difference will be charged to P&L. So next page 58.8 lakhs would be considered as borrowing cost. Balance would be exchange difference as per ICAI. Question number 4. Suhana Limited issued 12% unsecured debentures of 100 lakhs to be utilized as under. So 1st May we issued 12% unsecured debentures. Construction of factory building 40 lakhs. So 100 lakhs is used as below. Construction of factory building 40 lakhs, purchase of machinery 35 lakhs, working capital 25. Okay, fine. In March 22, construction of the factory building was completed and machinery was installed and ready for its intended use. So here we are using this 100 lakhs for construction of building, purchase of machinery and working capital. Working capital, we are sure that it is not a qualifying asset and that is to be written off to P&L. Interest should be written off to P&L. And factory building and machinery. Factory building anyway, we took the loan on 1st May and the construction is completed in March 22 that they have given. So you can assume it as qualifying asset or it is qualifying asset because a building cannot be completed in short span. And machinery, you should take an assumption. Machinery can be in ready to use condition or machinery is also installed in March and purchased in 1st May itself. Therefore, interest can be capitalized or you may assume machinery was already in ready to use condition, hence it is not a qualifying asset. Assumption is required. Anyway, total interest on debentures for the financial year is 11 lakhs. During the year 21-22, the company had invested idle fund out of money raised from debentures in banks fixed deposits and had earned an interest of 2 lakhs. Oh, you have interest expense of 11 lakhs. You earned interest when they clearly say how much is the interest that can be capitalized, if at all. How much is the interest expense during the year? Only 9 lakhs. Now, explain the treatment under AS 16 and also explain the nature of assets. So what I am trying to tell you is, if you get a question like this, first you write the introduction. You all know the introduction as per AS 16. Borrowing cost can be capitalized if it is directly attributable to the acquisition, construction, production of a qualifying asset. Qualifying asset is an asset that takes substantial period of time for its intended use. Okay. Now, in the given case, total interest expense is 11 lakhs and income earned is 2 lakhs, and hence the net expense is only 9 lakhs, which is accounted as below. You may either prepare a table like the table which institute used to make factory building. Amount used is how much? 40 lakhs. Therefore, interest amount. Interest 9 lakhs divided by, how much is the total amount? 100 lakhs. 9 lakhs divided by 100 lakhs into 40 lakhs. 9 lakhs divided by 100 into 40, 3.6 lakhs capitalized. Second one, plant and machinery. Amount used is 35 lakhs. So interest amount is 9 divided by 100 into 35, 3.15 lakhs. Here you prepare a column and write assumed as qualifying asset. Assumed as qualifying asset, and hence interest is capitalized. So no need to prepare this as a table. Just one by one you can write this. And the last one, working capital. Working capital 25 lakhs. So 9 minus 3.6 and 3.15, it is 2.25 lakhs. Charge to statement of P&L. In exam also write it as statement of P&L rather than writing the short form. Okay. So total 9 lakhs. Are you clear with this? Are you okay? Shall we move on? Then next, yeah, same thing. Here plant and machinery, in the answer plant and machinery is assumed as not a qualifying asset, but you can also assume it as qualifying asset. Then question number 5. Vital Limited borrowed an amount of 150 crores on 1st April 2021 for construction of a boiler plant, 10%. The plant is expected to be completed in 4 years. So you borrowed an amount of 140 crores for the construction of a plant. The plant is expected to be completed in 4 years. So of course qualifying asset. Since the weighted average cost of capital is 13%, the accountant of Vital Limited capitalized 9.5 crores for the accounting period ended 31st March 22. Due to surplus fund out of 150 crores, an income of 1.5 crores was earned and credited to P&L. Comment on the above treatment of accountant with reference to relevant accounting standard. What is to be done in the channel? So we know that when do we use weighted average cost of capital, weighted average cost of borrowings? When do we use this weighted average cost of borrowings? Only when there are multiple loans. Only when there are many loans we use weighted average cost of capital. Yes or no? So here it is not the weighted average cost of capital to be used. So here 150 crores loan is taken for the construction. So this is a specific loan. So interest to be capitalized is 150 crores into 10% minus how much is the interest income? 1.5 crores. 15 minus 1.5 crores. Interest to be capitalized is interest 15 crores minus 1.5 crores. Interest to be capitalized is 13.5 crores. So let's go through the answer. As per AS 16, the borrowing cost states that extent to the funds are borrowed specifically for the purpose of obtaining a qualifying asset. The amount of borrowing cost eligible for capitalization is actual borrowing cost incurred during the period less any temporary income received. So 15 crores minus 1.5 crores, 13.5 crores is to be capitalized. Are you okay? Now, question number 6. Mark it as very, very important question. This is actually a CA final question came, which I feel it can be asked in your exam also. ABC Limited started construction of an asset on 1st December 2021, which continues till 31st March 22 and is expected to go beyond a year. Okay, the entity has not taken any specific borrowings to finance the construction of the asset, but has incurred finance cost on its general borrowings during the construction period. Got it. We have started construction of an asset on this date and it continues till 31st March 22 and is expected to go beyond a year. So it is a qualifying asset. The entity has not taken any specific borrowings but has incurred finance cost on general borrowings. The directly attributable expenditure at the beginning of the month on this asset is 10 lakhs in December 21, 4 lakhs in each of the months from January, February, March. So we spend 10 lakhs in December, January we spend 4 lakhs, February 4 lakhs and March 4 lakhs. So total we have spent 22 lakhs. At the beginning of the year, the entity had taken an intercorporate deposit at 20 lakhs at 9% interest and had an overdraft of 4 lakhs which increased to 8 lakhs on 1st March. Interest was paid on overdraft at 10% until 1st January and then rate was increased to 12%. I want everyone. So you are required to calculate the annual capitalization rate for computation of borrowing cost in accordance with AS 16. So can you all read this part 2 times and then we'll answer. Read by yourself. At the beginning of the year, entity had intercorporate deposits 20. At the beginning of the year onwards, we have this. So at the beginning of the year, entity had taken intercorporate deposits of 20 lakhs at 9% interest and had an overdraft of 4 lakhs, which increased to 8 lakhs. Oh, from the beginning of the year till 1st March, it was 4 lakhs. Then 1st March, it has become 8 lakhs. And interest was paid on the overdraft 10% until 1st January, and then rate increased to 12%. You are required to calculate the annual capitalization rate. Guys, can you all read this part? Can you all read up to this? Can you read it 2-3 times? Then listen to this answer. That is, all the loans given are general borrowings. All the borrowings given are general borrowings. Therefore, we should take how many borrowings are there. So first January, beginning of the year means 1st April to 31st March. You have a 20 lakhs intercorporate deposit. And what is the interest rate given? So now listen. The borrowings given are the borrowings given are general borrowings. Borrowings given are general borrowings. Borrowings given are general borrowings. Therefore, here we need to calculate what? Weighted average cost of capital is to be computed. How do you compute weighted average cost of capital? Listen. First, we have a 9% intercorporate deposit. We have a 9% intercorporate deposit. How much? 9% intercorporate deposit. How much? 20 lakhs. So how much is the interest? 20 lakhs into 9% into 12 by 12 from the beginning. So it is 1,80,000 is the interest. Okay. Then you have from 1st April onwards, there is a OD, bank OD. So it was 10% bank OD. 10% interest. Check the question. 10% interest till which date? 10% interest until 1st January. So it is 10% bank OD, 4 lakhs till 1st January. So it is 4 lakhs into 10% until 1st January means 9 months, 3 months out. So 30,000 is the interest. Then the interest rate has become 12% bank OD. 12% bank OD, 4 lakhs. For how many months? January and February. But why? Because it is still 12% bank OD only. But in March, 1st March, the bank OD amount has increased to 8 lakhs. That is only in the month of March. So here 4 lakhs into 12% into 2 by 12. 8,000. So here 8 lakhs into 12%. So this is also 8,000. 4 lakhs into 12% into 1 by 12. 8,000. So total interest. Total borrowing cost. What are we calculating? We are calculating weighted average borrowing rate. So that first we calculated interest. 1,80,000 plus 30,000 plus 8,000 and 8,000. Total interest comes to 2,26,000. So weighted average borrowing rate is equal to 2,26,000 is the total interest. Now listen carefully. 2,26,000 is the total interest during the year. So that total interest we have divided by what are the loans you have? 20 lakhs. 20 lakhs loan is there for 20 lakhs in the 12 by 12 interest is there in the numerator. Okay. 4 lakhs loan in the 4 lakhs loan. First 4 lakhs 9 by 12. Another 4 lakhs into 2 by 12 plus last 8 lakhs into 1 by 12. So this is OD. So first 9 months OD 4 lakhs 10%. Next 2 months 4 lakhs 12%. Last 1 month it is 8 lakhs 12%. So here I have taken this weighted average borrowings also. So how much it is coming to? Lakhs into 12.666. So 24.33 lakhs. 2,26,000 divided by 24 lakh 24 lakhs 33,333. This 9.287. Let's take 9.29% is on an average per annum rate is. If 2,26,000 is the interest, 24,33,333 is the average funds used in the current year. So 2,26,000 interest divided by 24,33,333, annual weighted average interest rate is 9.29%. Did you understand this calculation? Watch it again if there is a doubt. Then what is next? After this, so the question is only weighted average borrowing rate calculation, but how much is the borrowing cost to be so how much is the borrowing cost to be capitalized? Borrowing cost. Cost to be capitalized. Our work started only in 1st December. So we spent 10 lakhs. So 10 lakhs into 9.29% into December, January, February, March. 4 by 12. Then 1st January, you spend 4 lakhs. So 4 lakhs into 9.29% into 3 by 12. 1st February, another 4 lakhs we spent. 4 lakhs into 9.29% into 3 by 12. And 1st March, 8 lakhs into 9.29% into 1st March, 8 lakhs into 9.29% into 1 by 12. So this is 30,967. This is 9290. This is 6193. And this is 8 lakhs into 9.29% divided by 6193 again. 52,643. Okay. Are you clear? Go through the calculations once more. This is a very good question. If you're okay with this, you know the concepts of borrowing cost. That is the meaning. So we have withdrawn 10 lakhs in 1st December means we are paying interest for 4 months. Because this is a loan. I am paying interest for 4 months. Why only 4 months? Because accounting year is ending. Okay, ഓരോ year എന്തിലാണ്? So 1st January, I withdrawn 4 lakhs on 1st January. So Jan, Feb, March, 3 months interest I would have paid to bank, that is capitalized. February, 2 months interest I would have paid to bank, that I capitalized. March, 1 month interest which I would have paid to bank is capitalized. Now, in May, question number 7. In May 2020, Omega Limited took a bank loan from a bank. This loan was to be used specifically for the construction of a new building. Okay. Construction was completed in Jan 21 and the building was put to its use immediately thereafter. Good. Completed in January 2021. Interest on actual amount used for construction of the building till its completion till the asset ready to use, the interest incurred is 18 lakhs. Whereas the total interest payable on this loan till 31st March is 25 lakhs. Okay. So the construction got completed in January. So till January interest is 18 lakhs. But till March interest is 25 lakhs. Okay. The company wants to treat 25 lakhs as part of cost of factory building and capitalize on its plea that loan was specifically taken. Explain the treatment. Even if the loan is specifically taken loan, cessation, when substantially all the activities are completed in January and the building was put to use in January, which means capitalization can be done only till January. Balance interest 7 lakhs should be charged to P&L. This is not our level. What is the answer? A16 clearly states that capitalization of borrowing costs should cease substantially all activities. Okay. Therefore, interest on amount has been used for construction of the building up to completion. 18 lakhs alone can be capitalized. It cannot be extended to 25 lakhs. So, when capitalization of borrowing costs should cease? Write the provisions. Theory question. Yes, this is a good question. Zen Bridge Construction Limited obtained a loan of 64 crores. Construction of Hill Link Road to Kedarnath. What do you think? That road we are constructing in Kedarnath is qualifying asset. Purchase of equipment and machineries. Assumption. You should write equipments and machineries are qualifying assets. Or you may assume equipments and machineries are not qualifying assets. Working capital. No assumption required. Not a qualifying asset. Purchase of vehicles. Generally vehicles is ready to use. Not a qualifying asset. Advance for tools and cranes. Again, this advance given for tools and cranes, assume as qualifying asset, not a qualifying asset. Generally, that is what ICAI stand. They are writing an assumption, you should write. Purchase of technical know-how, assume not a qualifying asset. Total interest 1.6 crores. Show the treatment of interest. I am not doing it. Let's try this out. Construction of Hill Road qualifying asset, yes. So how much interest? Total interest is 60. 16 divided by total loan 64. 16 divided by 64 into 50 proportionately 12 point. And 1.6 divided by 64 into 50. 1.25. Purchase of equipments. They have assumed as not a qualifying asset, so charge to P&L. Working capital, not a qualifying asset. Purchase of vehicles, not a qualifying asset. Advance for tools, not a qualifying asset. Purchase of technical know-how, not a qualifying asset. It is assumed that construction of Hill Road will normally take more than a year. അതുപോലെ assume that tools, cranes, machineries are not qualifying assets. You can also assume the otherwise. It is qualifying asset because no information is given. Okay. Then question number 10. An enterprise has constructed a complex piece of equipment, that is a qualifying asset, that is to be installed on the production line of a manufacturing plant. So you are constructing an equipment. The equipment has been constructed over a period of 15 months. So qualifying asset. However, on installation, certain calibrations are required to achieve the desired level of production before it's finally commissioned. This process is expected to take approximately 2 months, during which test runs will be made. Oh, now, should the borrowing cost attributable to borrowing pertaining to 2 months test run? 2 months test run will be there. So here, what do you think? 15 months construction time. However, before it is finally commissioned, 2 months test run. So what you should write? If 2 months test run is necessary to get the machine commissioned, 2 months test run, that is 17 months interest can be capitalized. Because asset will be ready to use only after that 2 months test run. Yes or no? So 17 months interest can be capitalized. Should capitalization of borrowing cost should be continued when the qualifying asset has been constructed, but marketing activities to sell the asset are in progress. Marketing activities to sell the asset are in progress. Though that period's interest will be charged to P&L. Asset is constructed and ready to use. Capitalization should be ceased once the asset is constructed and ready to use. Marketing activities to sell the asset are in progress, it cannot be capitalized. So this is cessation provisions are written. Necessary, substantially all activities are complete. So same thing. You can read. We have already done this. We have already done this. Now question number 11. This is again our study material question. Oh, let's read this. So I think after 11, 12, we can move on to study material and see. Harish Construction Company is constructing a huge building project. Okay, of 4 phases. It is expected that the full building will be constructed over several years, but phase 1 and phase 2 will be started as soon as they are completed. So we are constructing a huge building and this has 4 phases. So it is having construction will take several years, but phase 1 and phase 2 of the building will be started as soon as it is completed. So expenditure incurred on phase 1 building cash 34, 30, 34, 64, 25, 30, 55, 30, 38, 68. So total expenditure is 221 for this building. And we have taken a loan 15% interest at the beginning of the year 200. During the mid of the current year, which means 6 months, phase 1 and phase 2 have become operational. How much interest can be capitalized? How much interest can be expensed during the year? Very easy. 200 is the loan, but total expense is 221. So I can allocate loan towards this phase 1, phase 2, phase 3, phase 4 based on the expenditure. We can allocate. Yes or no? Please listen. How much is the total interest expense will be? 200 lakhs into 15%. That is okay. So now what I'll do? How much is phase 1 and phase 2? 34 plus 64 out of 221. So what I'm doing is phase 1 and phase 2 98, phase 2 and phase 3 and phase 4 123. So total loan is 2 crore. So interest attributable to phase 1 and phase 2, I'll do the calculation. 30 lakhs into, what is the proportion of phase 1 and phase 2? 98 out of total cost 221. 30 lakhs into 98 by 221. So it is 13 lakh. Please correct if it is wrong. 13 lakh 13,317. But of which 6 months can be capitalized, balance 6 months will be charged to P&L because of phase 1 and phase 2 becomes operational during the mid of the year. So balance 6 months should be charged to P&L. And what is relating to phase 3, phase 4? Balance. So 30 lakhs minus 13 lakh 33, 17. 16 lakh 69, 683. This can be fully capitalized. This is fully capitalized. So it is written in theory. Phase 1 and phase 2, since phase 1 and phase 2 have become operational at the mid of the year, half can be capitalized and half should be expensed off. Entire amount will be capitalized. Are you clear? Yes, hope so. Again, this is the kind of question which we did just now. So you can do it by yourself. Construction of factory building we take as qualifying asset. Working capital not qualifying asset. Purchase of machinery it is given not qualifying asset. Furniture not qualifying asset. Truck is not qualifying asset. So interest pertaining to factory building. So this information are all easy to read and understand. Just go through again similar type. Why similar type of questions are added? It is not added by me. It is already in the order of that pattern of questions asked. The other two calculation questions we have done. We have done. I think it's time for us to move on to the study material questions. Again, here weighted average calculations, weighted average borrowing rate is to be calculated. There is a special loan. So the type of question which we already did 15, 14, similar type of question which you can practice, answer is there. Then question number 17, foreign exchange, same type question you can go through. Yeah. So MCQs. So MCQs let's do from the study material. Module 2, asset-based standards, borrowing cost. So let's read. Is equity share capital a borrowing and cost of borrowing cost to be capitalized? No. Retained earnings? No. Preference share capital if it is treated as a liability. If preference shares are considered as liability, yes, borrowings. But preference shares are generally classified as equity. No. Borrowing cost includes interest and commitment charges, discount, ancillary cost, exchange differences. PPs are generally qualifying asset. Intangible assets can be, if it takes software you're developing, it takes 1 year. Qualifying asset. Investment properties, qualifying asset. Inventory. For example, for the in the study material, there was an example once you're manufacturing liquor. Okay, and it takes some time. For maturing time is 13 months. So it is considered as a qualifying asset. If they require substantial period of time to bring them to saleable condition. Okay, investments in equity shares? No. Gold? No. Okay. Then this is our example for an exchange gain. Directly attributable. Everything is specific borrowings, general borrowings. See, first question itself, just have a look. I'm not reading. Loan 120. This is used for this purposes. So what is the treatment? Total interest is 18 lakhs. So qualifying asset, only shed is considered as qualifying asset. Machinery, working capital, truck, purely based on assumptions, not qualifying asset. Then, yes, there are two loans, 11%, 13%. You need to calculate what? Weighted average borrowing rate. So here the question says you have 1 lakh specific loan 10% and two non-specific loans and date of expenditures are given. So what I will do? First I will calculate this weighted average borrowing 12.285%. So do you want me to calculate this or let's all do this together? Date of loan is not given. So 5 lakhs into 11%, 55,000. 9 lakhs into 13%, 1 lakh 17,000. Total interest divided by how much is the total loan? 14 lakhs. So are you all getting in the calculator 12.285%? Yes. So 12.285%. So on specific loan, first I will calculate balance on the general loan. General loan. Okay. And the single entry is building to bank. Similar question we tried in this video. Commencement, suspension, cessation. Commencement 3 points. Expenditure should have incurred. Borrowing cost should have incurred. Activities to prepare qualifying asset is in progress. Suspension during extended period which active development is interrupted. When substantially all the activities are completed. What are the disclosures? In the financial statements with respect to borrowing cost, any disclosure? What is the treatment adopted for borrowing cost by you? Capitalization, interest, charging to P&L, that you should write. Then how much is the weighted average borrowing rate, if any, used? Illustration 3. The company has obtained institutional term loan of 580 lakhs for modernization and renovation of its plant and machinery. Plant and machinery acquired under the modernization scheme and installation completed on 31st March amounted to 406 lakhs. 58 lakhs has been advance given to suppliers for additional assets and balance 116 has been utilized for working capital. The accountant is on a dilemma as to how to account for this total interest for this term loan of 580 lakhs. We have a loan of 580 lakhs. Interest is 52.2 lakhs. We have a plant and machinery which takes substantial period of time, completed on 31st March. We have given advance to other assets. Other assets you should assume whether qualifying asset or not a qualifying asset. Working capital is not a qualifying asset. So what we will do? Proportionately we will take, say here, other assets they assumed as qualifying asset. So 52.2 divided by 580 into 406 capitalize. 52.2 divided by 580 into 58 related to other assets capitalize. Working capital charge to P&L. See, substantial period of time depends on facts and circumstances. It is assumed in the above solution that modernization and renovation of plant and machinery will take substantial period of time. And regarding purchase of additional assets, the nature of additional assets are also considered as qualifying asset. Alternatively, the plant and machinery can be assumed as non-qualifying assets also. So that is totally based on the assumption. Okay. Now, Take Limited has borrowed 30 lakhs from SBI during the financial year 21-22. The borrowings are used to invest shares of GIF. So we have taken a loan, 30 lakhs during the financial year 11-12. So loan 30 lakhs. This is used to invest in shares of GIF. For when you purchase shares of another company using the loan, is it a qualifying asset? Investments in equity shares? No. A subsidiary of Take, which is implementing a new project, estimated at a cost of 50 lakhs. As on 31st March, since the said project was not complete, directors of Take Limited resolved to capitalize the interest. No way. Investments in equity shares cannot be capitalized. Investments in equity shares, interest incurred for investments in equity shares cannot be capitalized. So come on. As per AS 16, all the following are qualifying assets except manufacturing plants and power generation facilities, yes. Inventories that require substantial period of time, yes. Assets, those are ready for sale, no. None of the above. The following are qualifying assets except assets, those are ready for sale. Yes or no? Which of the following statement is correct? Entire exchange gain is reduced from cost of qualifying asset. No. Entire exchange loss is added to qualifying asset. No. No adjustment is done for exchange loss. Wrong. None of the above. None of the above. Because exchange gain will be credited to P&L, but exchange loss to the extent of savings only, whichever is less, to the extent of savings only can be capitalized. Capitalization rate considers borrowing cost on general borrowings only. Yes. Borrowing cost on general and specific. No, specifics interest is not added. Borrowing cost on specific borrowings only. Wrong. Only general borrowing. None of the above. Option A. If the amount, question number 4, if the amount eligible for capitalization in case of inventory as per AS 16 is 12,000. Okay. If the amount eligible for capitalization is 12,000 and cost of inventory is 40,000 and its NRV is 45,000, what amount can be capitalized as part of inventory cost? Very good question. Okay, listen. 12,000 interest can be capitalized. So 40,000 is cost of inventory plus 12,000 I can capitalize. Then the total cost becomes 52,000, right? But NRV is 45, which means maximum it can be only 45. So how much only interest can be capitalized? 5,000, option B. Only 5,000 interest can be capitalized, balance you charge to P&L. So 40 plus 12, 52. It is going beyond NRV. Maximum value of inventory should be at NRV, should be at NRV, should be at NRV. So only 5,000 interest you can capitalize, balance 7,000 can be charged to P&L. So option B. So please give the answer. X Limited is commencing a new construction project which is to be financed by borrowing. The key dates are as follows. 15th May, loan interest relating to the project starts to be incurred. 15th May onwards, interest. So 15th May. 2nd June, technical site planning commences. Okay. 19th June, expenditure on the project started to be incurred. 18th July, construction work commences. Identify the commencement date. Capitalization can be commenced when all the three conditions are satisfied. Expenditure is incurred 19th June onwards. Borrowing cost is incurred from 15th May onwards. Activities are in progress. Technical site planning, administration work is also activity. So 15th May, only interest incurred. 2nd June, interest and technical site planning. 19th June, interest, borrowing cost incurred, activities are in progress and expenditure incurred. So which means, what is the commencement date? 19th June. Option B. Option B. Theoretical questions, just go through. I'm not reading. Scenario based questions. 9, 10, 11, 12, 30. Okay. On 1st April 2011, Amazing Construction Limited obtained a loan of 32 crores. We took a loan of 32 crores for construction of a sea link across 2 cities. We are constructing a sea link. Work was held up totally for a month due to high water levels. So work didn't happen for 1 month because of high water levels. So can you suspend capitalization? No, because it is unavoidable. Can you avoid this? This is nature, so you cannot avoid it. Purchase of equipment and machineries, assume. Working capital, not a qualifying asset. Vehicles, generally not qualifying asset. Tools and cranes, no. Technical know-how, no. Total interest, 80 lakhs. So how much interest? What do you think? 80 lakhs divided by 32 crores. So 0.8 divided by 32 into 25. 0.625 can be capitalized relating to the sea link. Equipment and machineries, let's assume not qualifying asset. So 80 lakhs out of 80 lakhs. Can I check the answer now itself? So of that qualifying interest to be capitalized. 62 lakh 50,000 can be capitalized. Balance interest charge to P&L, charge to P&L, charge to P&L, charge to P&L. Okay. Now that is question number 9, 10. Rainbow, same question we have read actually. Rainbow Limited borrowed an amount of 150 crores. Interest rate is 11%. Specific borrowing. Plant is expected to be completed in 4 years. Weighted average cost of capital is not required for specific borrowings. So they have wrongly capitalized 150 crores into 13%, 19.5 crores is capitalized. Due to surplus fund out of 150 crores, income of 3.5 crores were earned and credited to P&L. Comment on the above treatment. So it's wrong. 150 crores into specific loan means specific interest rate. 11%, 16.5 minus interest received 3.5. So how much interest can be capitalized? 13 crore interest can be capitalized. Just try in your calculator. 150 into 11% minus 3.5. Weighted average is not required. So 11 is also done. See this phase 1, phase 2, phase 3, phase 4, same figures, same question. Next one is also we can easily skip. If you want me to read, I can read, okay. Expert Limited, let's read this. Expert Limited issued 12% secured debentures of 100 lakhs on 1st June 2011. Money raised from debentures is to be utilized as under. So interest on debentures was paid by the company. Okay. During the year, company invested idle funds of 5 lakhs and raised interest of 50,000. Okay, that we know. Interest income will be deducted. In March, construction of shed was complete. In March, construction of factory building was not completed. It is expected that it will take another 6 months' time. So it is a qualifying asset. In March, machinery was installed and ready for its intended use. But what is the date of purchase of machinery and how many months it took? That is not given. So it purely depends on assumption. Furniture was put to use. Again, was it any work going on? How many months it took? Not given. So assumption. Truck is going to be received in April. Okay. You are required to show the treatment. So basically very similar to what we are doing before. Construction of factory building, qualifying assets. So that interest is capitalized. Machinery, furniture, truck, working capital, not qualifying assets. So interest is charged to P&L. So that's it. A16 is done. If you have gone through all these questions, trust me guys, this is enough. You can go through additional questions in the material and the answers are also given. So with that, we are wrapping up A16, borrowing cost. Thank you.